Good afternoon. Afternoon, everybody. Hope everybody is okay. Welcome to. Excuse me. Just making sure I'm coming through okay. Welcome to what is the third episode of my 200 grand funded FTMO funded account journey. So I'm doing everything live. I'm doing everything's transparent. You can see that how I go about hopefully getting this 200 grand account in the right way. I know there's a lot of stuff online where, you know, people say they do it in 2 days, or they do it pass the FTMO in 2 days, or funded trading accounts in 2 days. As far as I'm concerned, if you're doing that, the likelihood is you're not going to have a funded account for a long time. Remember, trading is a long haul. It's not about having 1 day of massive gain, because the likelihood of people that have 1 day of massive gain, 30% or make 100% a month, is those down months are going to be very severe. And that's not the way that I trade. I'm not saying you can't do it at all. Everybody's trades differently. If people are profitable and they can handle it, then that's perfectly fine. For me, it's slow and steady wins the race. I'm happy to take small returns every month out the market and just continue, and that's fine. And obviously, as we know, or as you might not know, the more equity you have, but what I mean by that is the more money you have in your account, the more money you can make. So I never recommend people trading off anything less than $50,000 in an account. I generally don't. I don't see the point in it at all. Because what is the point? Say you can only afford $1,000. What is the point of making 3 to 5% on $1,000, $30 to $50? For me, I wouldn't even waste my time. What I always say and what I always tell people is, learn how to trade first, right? Use demo account, use money, maybe $500. If you can afford to put $500 and you can afford to lose it to get a little bit of the psychological aspect of trading, then do that, and then use your capital. Let's say you had $1,000. Use that $1,000 to get. You can get $100,000 or almost $200,000 challenge on that $1,000. So why wouldn't you do it when you get your 2 to 5% is a good passive income? I don't want to, I never want to sell the dream of, you can be an overnight millionaire. You can make all this money so quickly, because as far as I'm concerned, that's a marketing ploy, and it's basically all bullshit. Excuse my language, but it is. And a lot of social media accounts, a lot of social media traders, or fake traders as I like to call them. Not all of them. There's a few very good traders online, and as a trader you can kind of spot them as well. But it kind of annoys me, this image that social media is portrayed of trading, that you can make so much money, on a beach from your phone. You can make guaranteed $2,000 a day using this. Like, it's all nonsense. And trading, although it can be very profitable, there's no doubt, there's a long learning curve, and there's a reason why 95% of people fail, is because it's difficult. But once you get to the stage where you get past that learning and you are consistent, let me tell you something, it's awesome. And it's the best thing that I've ever done. I had a good job before, earned a good wage, and but I didn't enjoy it. And now I love what I do. I get up in the morning and really enjoy trading the market. So anyway, I'm kind of going off on subject here. 200 grand account, just started last week. I've only had one position on, so I'll go into the position, and then I'll go into what I'm looking at for the day ahead. And actually, there's quite a few setups, which has been quite rare the past week or two, because markets have been in kind of corrective mode, and nobody likes a correction. Markets don't like uncertainty. And you don't see a lot of moves when market conditions are like this. But it looks as if we may be getting out of it at some point soon. So this is where I am at the moment. This Swiss yen trade, like I said, is the only trade that I have taken. Let me just get my pen, if you can see that there, I hope. So I've banked just about 2 grand. I used 2% risk, so on this 200 grand is $4,000 per trade. I banked basically half of this, minus a little bit of fees. And right now I've got 1,190 running. Now that's nothing. This number doesn't really matter, because it's not closed, and nothing is guaranteed out of that money. It could shoot up or it could shoot down. However, and this is what, I'm going to show this all the time. I'm going to be completely, like I said, completely transparent. So this Swiss yen trade, on account of this 4-hour break, cut with handle, wedging pattern, which is what I like to see. Good strong break. And then we got this nice complex corrective here before a big bar or a big bullish impulse here in the Swiss yen on, I think it was Thursday night. So I placed 2 trades, one at 50%, 1-to-1 risk reward ratio. I took 50% off, and I let the rest run, with the idea being that if a good strong trend develops, I can move my stop above those swings and keep capturing more and more profits. So at the moment with the Swiss yen, I didn't actually want this to happen, which sounds strange, but I would have preferred movement like this rather than one big impulsive bar like we've got here, because normally you do see this happen on these big impulsive bars that kind of jump out the chart to you. Is markets have to digest this, and whether we've come to the end of this digestion period, the 4 hour is, it was a decent closure there on the 4 hour, and potentially we start moving up. My bias is still to the upside because the daily chart is on an uptrend. I'm not going to pick the end of this uptrend. I'm just going to go with it. However, I was hoping to move my stop after these 2 bars, but I need an anchor to do that, and I can't do that with this wick here. So now I'm looking for another 2 bars. Now an anchor is if you're on an uptrend, you have 1 low bar followed by 2 higher either side. Like for example, like this is called an anchor. 1, 2. Same with this. 1, 2, 1, 2. And there's a slight difference between the anchor and a swing. So for me, if I scroll back to this chart, technically this is an anchor, right? But for me, it's not a swing. This is a swing. So there's slight differences between anchors and swings. So now I'm looking at, I need to wait 8 hours, and hopefully this pushes on, which means I can move the stop from here up to probably around there. So again, a little bit of gap between my stop and the candle or the anchor. And I like to leave that little bit of room because, just lets the trade have a little bit of room to breathe. And if I get to do that, and even if it comes down and stops me out right now, it's still a profitable trade, and I move on to the next one. So that's the Swiss yen, and I can't lose on it, which is always nice. The SPX today, always start by analyzing the SPX. It's the biggest market in the world, and you can analyze all the indexes if you want, in Nikkei, the UK 100, etc. But for me, to keep things simple, I just like to use the SPX because I find that it's the most heavily reliant for my risk sentiment, and it works the best. So I did say last week that this here didn't look very nice. We had this potential head and shoulders, broke through, and it's starting to kind of shaping up a little bit with this corrective, possibly into another corrective. My bias is that we get up to these all-time highs, but I would be wary if this pushed through at this current point in time, because I think it would be susceptible to a snap back. Whereas if we get up to this area and potentially have another larger reload, something like this, before moving up, I would consider that a lot healthier, because on the daily chart, it just, after this quite substantial move upwards, it still needs to digest a little bit more for me personally. But it's starting to look better. So I've classed it, as you can see on my screen there, as slight risk on / corrective. So it is risk on because we are on an uptrend. So we have to class it as risk on. If you don't know what that means, it's when things are risk on, markets are pushing up, things are quite good, investors are confident, and normally in those times you see commodity currencies, i.e. the Aussie dollar, the Kiwi, and the Canadian dollar being quite heavily bid, i.e. strong. And the risk off currencies, the Swiss yen and the Swiss franc and the Japanese yen, or the Swiss and the yen, be quite weak because they're known as risk off currencies. Now, post-COVID, the US dollar is also acting at this current time like a risk off currency. And what I believe, whether it's true or not, I'm not a fundamental, I'm a technical trader, is that when markets are falling, people are having that flight to cash. So what they have to do to sell stocks, they've got to buy US dollars, which is why we may have seen the US dollar strengthen during these risk-off periods when the market is falling. So at the moment, during this time, it might change with the US dollar, but the risk-on currencies are the Aussie dollar, Canadian dollar, and the Kiwi. So when we see markets push to stack the odds in our favor, which is what we like to do, we're not gamblers as traders. We're playing statistics and data in order to stack those odds in our favor when markets are pushing up. You know, I like to buy those commodity currencies, the Aussie, the Kiwi, and the CAD, against the risk-off currencies, the Swiss, the yen, and the US dollar. Again, stacking the odds in your favor. So risk-on / slight corrective in the SPX, and the dollar, which the dollar has been weak for some time, is actually a potential setup for me on account of this big V reversal. And we're seeing a lot of them, or I'm seeing a lot of them in the market at this current point in time. So one of my favorite patterns to trade is a V reversal. We've got accumulation, V reversal, and now we have a complex. I mean, you can't really call it a complex corrective because these lows have been broken. However, we're look to be testing this area again. Now, if the dollar breaks lower, I would be looking for a retest of that area in order to continue downwards on what is clearly a downward trend on the US dollar. And if you look at the 4-hour, we can see a big rejection here, big bearish engulfer on high volume, and possibly this kind of corrective is coming to an end, and the dollar might continue to the downside, which is what my bias is. Now, with these big bars, like we've seen in the Swiss yen, you could get a bit of pullback within them. You know, more often than not, you'd see a pullback rather than a straight shoot down, and I think that's maybe what we get. Again, it is a Monday, so potentially we nosy around here on a Monday, and then we end up dropping off tomorrow when markets start moving, i.e. fundamental drivers come in, because you know they say Monday is a setting up day for the week ahead. There's not normally times where I get a lot of positions on a Monday, but the dollar looks decent for downward movement. Look at that simple 20 period moving average, and it's rejected off of it. 1, 2, another great. I mean, that's a textbook. That's an absolute textbook hammer there. Nothing complicated about it, but that is a textbook hammer candle that indicates potential bearish movement. I'm not saying it's going to happen today, but I do expect dollar weakness for the coming week, I would say. But I'm not going to put my hat on it. That's just my bias. So like I said, quite a few pairs potentially setting up for the week ahead. We have EURUSD, that's obviously going to be similar to the dollar index. Big V reversal here, consolidating at the moment because this was a substantial push to the upside. So it's like, I mean, would you go long there? There's no way I'm going long there after all this, this impulse. The move has happened. You've got to let that move digest. Remember, markets trend 30% of the time and range 70% of the time. So for a big impulse, you get a big consolidation period, and that's where patience kind of comes in. Now I'm looking at this area here. So as we can see at the moment, it's potentially coming down, but I'm looking for it to test this area once again, have a little reload, cross that 200, let that 20 period curl up, push through, retest that area to go long. The context is good. You can see on the 4-hour, we'll have what's known as I call it a bullish 180. You can call it a, train tracks, rail tracks, whatever you want to see, but it's essentially an immediate rejection. So we have a big bearish bar here and an immediate bullish bar, roughly around the same range as that bearish bar, coming back into trend. Now, you notice, and one of the reasons why I like this V reversal type stuff is, where do you expect a lot of stops to be? Probably here, right? In terms of, this is an uptrending currency pair. The USD has been uptrending. We've established a new anchor, a new swing low, and if trend continuation traders, you'd expect stops to be there. And it's funny how often you see this in the markets. I don't know whether you believe in manipulation or not. That's up to you. But you see time and time again where markets that are on a trend and then for no fundamental reason end up going like this, and they're moving on up. You want to call them stock punts. It's that's your opinion. Do I believe they happen? Yes, absolutely. Do I believe there's manipulation in the markets? Yes, absolutely. Anyway, that's why I like the V reversal, because, you know, with the Vs, you get this, and then normally you end up going up in the, you know, the trend direction. So Euro USD I like. It's not ready yet, but it's something potentially for the week ahead. Pound CAD was another that I think is falling slightly here. I did look at this last week, but that 200, again, simple 200. Dynamic resistance, is that, you know, these moving averages are known as dynamic support or dynamic resistance to price. Which is one of the reasons why I couldn't take a breakout there. But also the 20 period, you know, simple 20, I need a slight little reload before I would take that long. Anyway, so what I'm looking for now with this pound CAD, we got a cup with handle. Potentially we're getting an ABC kind of harder reset here for movement upwards. Now that might not happen because it is a counter trend trade. Obviously the CAD has been strong, but the CAD has actually been the strongest in the basket for quite some time. And it could be a case of, you know, a complex corrective prior to continuing that downtrend. Of course it can. But what I'm looking for and what I want to see is potentially a harder reset from this big kind of ranging price action to come back up, reload. I know that's not very clear. I'll zoom in to make it a bit clearer. So what I would prefer to see is potentially a price action like this, push up, another reload, creating a possible head and shoulders. Let that 200 continue on this trajectory, so our buy stop is above that, which again adds barriers or support because our stop loss will be under the previous swing. So again, we get you know, a little bit of barriers to our trade to the upside. So that's pound CAD. I do like it. It's not as nice as the other ones, but let's see if it sets up in the week ahead. Pound USD is something I like a little bit more actually, because it looks a little bit clearer, because main thing is we're going with trend, you know, big push up in the pound, nice corrective here, very simple price action, corrective, consolidation, or ABC you want to call it, and then we're pushing up. After this push, we're getting this reload to the 20. Now the 20, what I use it for is, you know, a visual guide, and actually it was one of the things that turned my trading around, funnily enough, a simple 20 period, because you're looking to get in moves at the start of the move rather than the end. And by making sure there's no extensions, for example here, look at that pull back to the 20, just gives me an idea that this is, you know, potentially ready for an impulse to the upside. You know, so I don't like, see if I can find an example here of extensions. For, you know, here with a slight extension here on the daily, comes back and it likes to come back around that 20. You know, I'm not going to be taking trades up here because there's a slight extension on the 20. I'm not going to be going short down here because look at that massive extension to the 20. I mean, you can see that just from price action. But again, it just visually, for me, a simple 20 period allows me to get into moves when potentially about to start, rather than, you know, trying to get on the train when it's already left the station is the best way to stay it. So pound USD, something I like. Potential head and shoulders here. We've got another bullish 180. Which on the smaller time frames you'll see is a V reversal. There we go. There's your V. But I want something similar with pound CAD now. Something similar to this. Let that kind of squeeze into the level for a breakout there. I'm not worried about this volatility spike. I consider that as a fake out. But, you know, I would certainly take pound USD to the upside. Daily looks good. I'm not going to predict the end of that trend. You know, even if it comes down here today, okay, something similar to this, and take that trade long. I like that. It's not something I can put in my buy stop now, because you have to be patient and you have to know. I have a gut feeling whether I like stuff or I don't like stuff. And if I don't like stuff, I'm not going to put my order in. Pound USD. DXY, we talk about USD check is actually quite interesting. I do like trading these exotics, but it looks to be, now I do my scan in the morning, so when I re-look at them, some of them might be gone, some of them might be irrelevant now. I'll have to wait and see. But at the moment, this is still okay. Potential larger ABC. Now, if this pushes up here, this bar pushes up and breaks through here, I've got to take that off. Take that off to watch this, because I'm looking at a break underneath this area. So it needs to come down. Again, similar. They're all very similar today. Reload, retest, 200 come through, and play that to the downside. Clearly we are on a downtrend. No extensions there in price. Bearish engulfer, another. See with the USD pairs, bearish 180 in price action. We could be just digesting that and potentially moving down. So, you know, we're seeing a lot of that with the US dollar, that, you know, slight fakes to the upside against the trend. Whether they sustain or not, we'll have to wait and see. Obviously, if they sustain, then none of the setups will come, so you don't take any trades, and which is absolutely fine. You know, at the moment with my month, I've just started this 200, but you know, my month has been excellent. I've won 1, 2, 3, 4, 5, 6, 7, 8, 9 out of 10 trades. Is that right? 1, 2, 3, 4, 5, 6, 7, 8, 9. Sorry, 8 out of 9 trades I've won this month. And actually, if I'm being critical of myself, that EURUSDJPY, looking back, I probably shouldn't have taken that. So it should really be, I should be sitting on 12. Now these are in progress. So these two are in progress. USDZAR is in progress. This is not, as I said, this is not on my 200 grand funded because I've just started this, but this is my month in general. And it's been great. So yeah, I'm not going to take a trade that's going to take, you know, 2% off my return because you know, I want to be excited and be in a trade. All new traders are all excited. Oh, I've got to be in a trade because it's, you know, it feels good. But as experienced traders, because you've lost so much, you know, and as going through basically the shit of being learning how to trade, you lose so many trades that, trust me, you just don't want to do it again. You know, I've blown so many counts in my learning phase that I just don't want to do it again. And I will never, excuse me, something in my throat. And I will never, what are you? Had the vaccine jab yesterday, so I think I feel like I'm hungover. What was I saying? Yeah, that I've blown so many accounts that I just don't want to do it again. You know, and I will never risk more than 2% of position. I will never revenge trade. I'll never do it again because it's caused me too much pain. And I think you get to the stage where you're just like, I just don't want to do it anymore. You know, too much stress. I think I broke my door, learning. I broke my desk because I was smashed on the desk and saying, God damn it, I can't make any money in trading. You know, just, it was unbelievable for a period of 8 months where I was really stressed trying to learn. And then you eventually just take it one day at a time, keep going. And you get to the point where, you know, you get a funded account. You know, you are consistent. And then the money comes. And that's the best part. You go, you know, I feel like I've been through the shit. And I deserve now to make money. Like, I deserve it. Which maybe some people watching this might be going through the shit as well. Trust me, you might not believe it. And I didn't believe it at the time when I was going through it. It gets better. You know, as long as you do it smartly and maybe you take a step back and analyze why trades go wrong. Analyze why trades go right. Back test your strategy even more. Just taking a step back. Trust me, you know, and I know trading is difficult. And when you get past it, which I didn't think I do, but there is a day where you'll wake up and you think, wow, I've gotten through it. I can finally say to myself, I'm a consistently profitable trader. And that's when avenues open up. You know, $1 million of funded equity is there. That's what I want. I believe I will get that. It's just, you know, it's just a matter of time now. And that's when, you know, the money comes, and it's very exciting once you get there. So if you're watching this and you're still struggling, just keep working, back test, you know, make sure you never over risk. Write in your diary, do a diary out. I look back on my diary, I'll do a YouTube video on that, which is quite funny. And you'll get there. Anyway, I keep going off on a tangent here. So USD SEC, let's see if that sets up to the downside. Potential breakout and retest short. Pound Swiss is another one I've been looking at for a few days on this daily chart. Uptrend, nice larger ABC corrective here. So we're looking at a break of this larger B wave. I know this impulse is quite significant, but it's settled now. It's settled well. And I'm looking at a cup with handle. And within that cup with handle, again, ABC, you see it time and time again. ABC. So I'm looking here for a push up and another reload before going long. Stops under there, breakout there, 20 period catch up, for taking that currency pair long. I like that again. I like that again. A lot of these pound pairs, I think I have pound Swiss, pound CAD, pound dollar, all on my watch list for this week. And they all look quite nice. You know, pound Swiss I like, pound... And if I had to pick 2 out of the 3, probably pound Swiss and pound dollar is what I want to see set up, because if the stocks do push on, you'd expect the Swiss to be weaker, you'd expect the dollar to be weaker. And the pound, as we know, with the pound, if it gets momentum, and it, you know, just blasts off. So I like pound longs. Finally today, the last one I'm looking at is this NZDJPY, which again I like. And I enjoy getting a watch list and waking up to a watch list that has so many pairs on it, because the past 10 days or 2 weeks, I probably had 1 or 2 pairs or 3 or 4 maximum on watch list. So this is what I kind of like, because I've sat through boring markets to hopefully get to the stage where once it moves, we're on the right side of those moves. So NZDJPY, head and shoulders, you want to see it, cup with handle with a nice corrective here, broken through. Looking for a retest of this area, a potential catalyst, whether it comes in a form of a hammer or an engulfer, something like that, on that 20 period. Potentially with higher volume. That's what I'm looking at for NZDJPY. I like that. I like that to the upside again. I like the idea of selling the yen. The yen's been weak, and I fancy the yen to continue to be weak. I'm not going to predict when the yen's going to get strong, because I'm going with the trend. So if the yen wants to get strong during my trade, that's fine. You know, I've been profitable against the yen this month, selling the yen. So, you know, nothing can, you know, end. But if I'm having a fundamental bias or that worry in my mind that, oh, the yen's going to get strong, it has to, it's been so weak, you'll end up missing trades. Just go with the setup. That's all you care about. And I think that's it for today. Oh, sorry, one more. There is one more, the China 50 on this daily. On account of this setup here, nice cup with handle, reload back to that 20, moving averages underneath, good bullish pressure through. I think, to be honest, I think this is maybe too extended. I don't really like this price action. It looks a bit more like a topping structure rather than a corrective structure for me. So I'd be looking at possibly a complex corrective here, but again, if you ask me what I prefer, NZDJPY, you know, I certainly prefer them. So let me see if I can show you. I can show you this actually. This is my watch list, which I put up on the website every day. If you can see that online. So we got the risk sentiment there. These are the pairs that, you know, the level has been broken. NZDJPY, China 50. These are the pairs that have potential prior to break. These are the pairs that are potential for a breakout. Remember, I trade the breakout on the 4-hour and daily charts. I only trade the breakout retest on the 30-minute. Well, I trade the breakout retest on all time frames. I just don't trade the breakout on the 30-minute or 1 hour. And these are my current open positions. Oh, why is that gone all big? Excuse me. And these are my open positions at the moment, Swiss yen and USAR. This is obviously not taken on this funded account because I took it a bit of some time ago. Oh, you can't see that, sorry. Let me do this. Excuse me. So this USAR and Swiss yen, I think you can see that now. Yeah. This is taken on my actual funded account. This is only one on the 200k, which is unfortunate. You know, I don't know if anyone's the same, but I would have had 2 winners there. Another 2 winners. Both TP1s have been hit. Both stops have been moved. I mean, it's just been a lovely month. It's just been an absolutely lovely month, and I hope it continues. So that's what I'm looking at. Let's hope we get something, and at the end of the week, we're a little bit closer to that 10% equity return. But as I say all the time, certainly to the members of the website, always aim for a free repeat. You know, you get to the point where you definitely guarantee a free repeat by making a bit of money, then you can just go for it. You know, in the last week, if you're, let's say you're 5 or 6% up on the month, you can just go for it. You know, have a little scalp, you know, just try and pick it so you hit that 10%. If it doesn't work out, you've guaranteed a free repeat and you go again the next month. That's why it took me 4 months to get my first one, because I got to my average 3, 4, 5% per month and then I just went for it. Sometimes it goes for you, sometimes it you know, it doesn't. You don't normally get, for example, when I started this, my first 200k, I actually went on a drawdown before I started. I don't know if anyone else has experienced that, but typically when I go, as soon as I click buy on a challenge, I usually lose the first trade. I don't know what it is, and I end up losing 3 in a row. And then thankfully I had a good run to get me back to a free repeat, so I got this second one. But unfortunately, if I did start in May, I would have completed it, you know, after that 6 trades. Anyway, that's life, I guess. You can't pick when the winners are going to come. You just have to stick to your strategy. All right, everyone. Thanks for watching. I appreciate you being here. I'm going to be streaming live every day. I think around 1 p.m. GST, but I think it changes maybe on Thursday. I'm streaming at night. But if you'd like to subscribe and get notified when I do stream, that would be great. Help me out. I'm a very new person to YouTube. Just learning all these stuff. I know how to trade. I can trade in my sleep. But this kind of stuff is all new to me. So if you would hit subscribe, that'll be great. And hopefully you get some value out of this content. Thanks, everyone. I hope you enjoyed it, and I'll see you again tomorrow. Peace.